Hi, this is Timothy Hicks, the Mortgage Tool, and thank you for tuning in to another episode of Mortgage Speaky. This is part 2 of TMI about PMI. So the last episode we learned why you have to pay mortgage insurance, and this episode answers the question, can you have your MI removed on a conventional loan without doing a refinance? And the answer is yes. It's a simple answer, but it's also kind of a convoluted one, which is how a lot of lending works, so bear with me. So yes, you can have it removed. In 1998, the Homeowners Protection Act was signed by Congress, and that requires MI to be removed at a certain point in time. And that certain point in time is when you owe 80% of the value of whatever the value of the home was when you originally bought it. So if you bought your home for $200,000, you put 5% down, so you owed $190,000 at origination. Once your home reaches, or the loan amount gets down to $160,000, that's when you can request your MI to be removed. Now, if you're in good standing, if you've made your payments on time, your MI legally should be removed. But if for some reason they don't remove it, there's another clause in here, there's a termination date where once you owe, your loan amount is at 78% of what the original value is. So in this example, if you owe $156,000, it's supposed to come off regardless. You don't even have to write in a letter per se. They're just supposed to remove it, again, as long as you've made your payments on time. There is nothing, however, in this legislation that permits MI to come off based on new appraised value. So if you bought your home a couple years ago for $200,000 and you know it's worth $250,000, $260,000 now, can you get mortgage insurance removed? That answer is more complicated. It really depends on the servicer of your loan, because legally they are not required or obligated to remove that MI, but a lot of loan servicers have a policy in place. Some of them require at least 2 years on the loan. Some only require 12 months. All are going to require you to be in good standing. All are going to probably force you to pay for an appraisal, and it's going to be an appraiser of their choosing. So don't go out and spend money on an appraisal just yet. Wait until you find out what that policy is if you want to have your MI removed without refinancing. So it's a little more complicated than it necessarily needs to be, but that's the short and skinny of it. If you have any other questions, please reach out. I'm Timothy Hicks, I'm the Mortgage Tool, and I'm here to help you own it.